So right now I'm gonna make a video on the things that I've been writing down, a list of things to keep in mind when being a stock trader. For myself, this is just for me to consider. And here we go. It's a list, and I'll pause in between each point and maybe give some insight. That way, when I listen to this, get time to think about an answer, a response, or to elaborate on what the the point says. So here we go. Um, this is for YouTube. If you're listening to this, this is for me mostly. So when I listen to it while I'm working, I could um, keep these things in mind and ingrain them in my head while I'm working. And once it comes time to trade, I will uh, have a better understanding of what to do. Okay, here we go. The goal is to be green. That's it. There's no other real objective. Be green. Be green. We're not focusing on a dollar amount. We're just focusing on being green and, most importantly, executing your strategy. Number two, you have to be fast. When you're day trading, you have to be very fast. You have to be focused. All your attention is on price movement, momentum. You have to get yourself in the zone, and you have to trust yourself. So, why do you have to be fast? Because it depends. Your strategy depends on it. Your success depends on it. Number three, only trade on the indicator. If you have an indicator, use that to trade. Use that to make a decision. If it's triggered, trade. Like, there's no reason to really think twice about it. Test it. Number four, manage the gut. So, meaning manage how you feel. That's done by taking into account your share size. Your share size triggers a response. If it's too big, it triggers panic. If it's small, it triggers patience, and that's good. This is to increase confidence. Little by little, as confidence goes up, share size increases. Number five, or next point, previous support may become resistance and vice versa. As the stock moves up, creates a peak, that peak could be a resistance. As the stock is going down, it creates a bottom peak that creates support. May not always the case. I do trading. So next point, I do trading because I like doing it. It's for the long run. It's long term, and it's something I'm looking forward to in the morning. I eventually want it to be fun. I want it to be something I enjoy doing in the morning, and it will be a part of me. It will be a career. It will be my way of life. It will help me manage my own emotions. Next point. When perceptions are worse than future reality, markets rise. So if perceptions are bad, but the reality is good, markets rise. Market always listens to the reality in the long run. In the long run. Short term perceptions do affect the trend, but in the long run, reality always comes ahead. Next point. Use your instinct. I use my instinct. I trust my instinct. I trust my instinct because I have trained my instinct. That's why I need to practice. That's why every day matters. Every day that I practice contributes to an improved instinct. Only trade. I only trade what's popular in the current day. So I find the stocks that have the most attention. Next point. Buy when everybody is going or is buying. I buy into the momentum. So I make sure there's momentum. Next point. Compare the reward versus the risk. This is one I am currently struggling with. I haven't paid attention to it, and I have to focus on that ratio, making sure I calculate reward versus risk, but I have to make sure it's fast. It's done very fast. Next point. Create the energy in order for me to win. Have a winning attitude, a winning mindset. I have to have that energy to want to wake up and get on with a trade. I cut losses quickly, otherwise, it's money I am just giving away. The strategy I have, I implement it, no exceptions. I must trust the strategy. Next point. Each trade is a statistically independent opportunity, meaning anything can happen. So be fast, think fast, trust your strategy. I trust my strategy. Remember these tips are for me. This is what I tell myself. This is not advice. Do not take this as advice. I don't, next point, I don't board trade. I avoid putting on a trade just because I'm bored. I'd rather just do something else. Why try to make the market do something for me? I trade on what's available. I take advantage of what's available. Next point. Level 2 tells me the buy and ask, the the ask and bid spread. I make sure the spread is small. That way my slippage is not crazy. Next point, I pay attention to volume breakouts. But most importantly, I pay attention to, synonymously, I pay attention to volume breakouts with price breakouts. I may be wrong, but volume does indicate to me that there's going to be an increased participation. Next point, there's weakness and strength that I can notice during a trading session. Who has the most strengths? Strength, bears or bulls? Ride the one that's strongest, the one that has the strongest conviction. Next point, trade the best, leave the rest. Quote from Warrior, Trading Ross. Next point, ask yourself, is this FOMO? I ask myself, is this FOMO? Am I putting on a trade because I think I'm missing out? If it's too extended, I don't get involved. But if I see an opportunity that's backed with technical analysis and a strategy behind it, I will take a trade, ready to cut my loss and take a profit. Next point, I love the process of trading. I like having all these things in my head. I like processing them and trusting myself. Along with trading, next point, along with trading on a technical trigger, I pay attention to the catalyst. I check the news and see if there's anything causing momentum. Next point, I try to aim for 20 cents per share. Or if there's weakening, I get out and just get what I can. But if there's a lot of movement, I try to stay in and see where it's going, but always ready to exit. Next point, don't look away from your trade. You're in the trade, your money is at risk, my money is at risk, and I am not going to look away. I'm going to stay in there to see what's happening so I can take appropriate action. I'm not going to go to the restroom. I'm going to watch the trade. Next point, all this trading is not for the money, it's just for learning a skill. I don't need the money. I make enough money from my own job. That's what I tell myself. It's true for a single person like myself. I'm I'm fine as I am right now, so I'm not trying to extract money from the stock market. I don't need it. It's not something I need immediately. I'm doing it for the fun of it, for learning a skill, and I am patient. I am patient. I look forward to learning another year or two. I'm refining my skill. Next point, price movement is an imbalance of conviction. This relates to strength of bulls and bears. The price movement is telling me the imbalance, who's more convicted, who has more conviction, who, bears or bulls, is more correct during the moment. And I will try to be with the herd that's most correct, with most, which is most convicted, with the most conviction. Next point, I pay attention to how I'm feeling. I avoid euphoria. I don't want to be in a euphoric state. I want to be as neutral as possible. If there is a big win, I don't care. I don't care. It's not going to influence my emotions. If I have a loss, I also don't care. But most importantly, if I have a win, I avoid being in euphoria. I don't need that. It's going to cause damage to my account in the future. A win does not mean I'm a genius. It just means the strategy was correct. And it's not always going to be correct. And anything can happen. I could lose everything. Anything can happen. Next point, I need to have an edge. Edge. I have to have an edge. My edge is the strategy, my mindset, my confidence, my ability to trust myself. So I can have an educated guess. This is from a trader coach named, last name is Douglas, I believe. Next point, predetermine my risk. I need to predetermine my risk. That goes back to risk reward ratio. I need to understand what's at stake when I take a trade. I need to draw the lines of support and resistance. I need to see that in order to take that trade and know if it's worth it or not. So this goes back to understanding fills, gap up fill, gap down fills. The possibilities are a lot. Next point, the trade is just a random outcome. It's going to be random at times. Um, you just gotta go on a trade by trade basis. This is again something from Douglas. I I still have to know exactly what that means. The trade is just a random outcome, which to me means anything can happen. Next point, take the next 20 trades. I take the next 20 trades no matter what, following my strategy. I'm always ready to take the loss, but also cutting my loss really quick. Next point, manage your expectations. I don't get excited. I don't try or dream or speculate about how much money can be made. I just go based on what's happening at the moment. I live the moment. I'm not expecting anything. I'm just following a simple strategy. I simply got to stick to it no matter what. Next point, go from a trade by trade perspective to a series of trades perspective. Another thing from Douglas. This is something it's hard to agree with, kind of contradicts anything can happen. It's more based on statistical, but I could agree with it. I think it's synonymous, trade by trade and a series of trades. Um, I think a series of trades is more practical because I would understand that anything can happen, and eventually I will be more right if I follow my strategy and cut losses sooner. I think that's what it means. Because if it's trade by trade, I will probably have an expectation like, okay, this trade is going to be different. No, trade by trade is increases incorrect expectations. A series of trades is sometimes you win, sometimes you lose, and hopefully your series of trades come out positive. That's all it means for me. Next point, I believe I deserve the money I will be making trading. So I deserve it because I followed my strategy, and it all comes down to that for me. That's that's why I made the money. I followed my strategy. I did what I had to do. I listened to myself. So I don't care the dollar amount. I deserve it because I've worked hard to train myself. Next point. Pay attention to level two. Yeah. Pay attention to level two. And pay attention to see if there's any hidden seller. Next point. You will get what the market gives you, not what you want. So the market's just gonna do its thing. I just have to make sure I get the thing I can get. Take advantage of the opportunity. I can't control the market. The market is doing its thing. I just have to be on it, ride it, know what's coming, and apply strategy. Apply my strategy. Next point, get out as soon as you get what you expect and as soon as you don't. So I'm ready to exit either with a win or a loss. I'm ready to take both actions. So during a trade, don't get your I am not gonna get euphoric and think that it's gonna go berserk. I'm just there to get what I want. Get what I can. Next point, I'm a trader, not a speculator. I am trading. I am strategizing. I am following a strategy. I am not saying or investigating what's going to happen down the line. I'm just looking at momentum, current convictions. Next point, if it doesn't show up, if nothing is at the market that looks good, I am not going to trade. It doesn't exist. The opportunity does not exist, and I should just move on to something else. Next point. These are older points that I will be going through. Um, go slow. Don't rush things. So this goes back to I don't need the money. I don't need the money. I'm going slow. I'm going at my own pace. I'm patient. There's enough money for my job that can support me. So anything I make in trading is nothing important and not something I'm gonna give all my attention to in terms of euphoria. I'm not gonna get euphoric of any wins. It's a skill I'm developing, and it's just gonna happen on its own because I have put in the work. I will put in the work necessary. That's all I'm saying. I need to put in the work. Next point is the same thing. Trade for fun. Winning profits and winning profits, not for the need of money. I'm trading for fun and winning. That's all. I'm just winning and having fun. I don't need the money. I just want to win and have fun. Next point. The weakness. I see bears. When I see weakness, I see bears. And when I see strength, I see bulls. They can switch simultaneously on one another. Next point. Once I get a big win, I will not give it back by over trading. I'm not gonna get greedy. I'm gonna take my win and walk away from my computer. If I lose, I will do the same. I will walk away from my computer, take the loss. I will not revenge trade. It's part of the business to take a loss. It's part of the business to walk away, take your profits, and move on with your day because you spent your focus on a trade. You need energy. It requires mental energy. If I don't have that mental energy, I'm not gonna extrapolate it from somewhere I don't have it. Next point, if I missed out, um, if I missed out, I missed out. Come back another day. Learn from your current day. Take notes. Look at the movement, price. Analyze what you did wrong. Why'd you miss out? But don't try to trade FOMO status. Next point, don't gamble. If you gamble, you're in a casino and you're likely to lose. I'm likely to lose. I'm talking to myself again. I don't gamble. I follow a strategy. I check and I try to detect breakouts and bailouts. So a stock will either break out or it will bail out, and I have to be ready for both. Got to be ready to exit either on a profit or on a loss. Next point, when something is not working, I will get out. I will get out as soon as it's not working. Don't need to see a drastic negative confirmation. I just need to know that there's weakness and I need to get out. Next point, I control my impulse. I have to be sure of something, and I will be sure of something by practicing every day the market itself. Can't procrastinate. Even though I'm not trading with real money, the fake money will train me. Next point, have the entries and exits in your head. If they don't go that way, get out. Next point, I ask myself, will somebody pay more? Otherwise, why am I getting in? Do other people see the stock going higher? Do they see hype? Do they see potential of making the stock go higher? If so, there's potential. There's an opportunity. If not, I will not get involved. Next point. Um, Only 3 trades, day trades, allow a week. I'm not gonna mess around with a 25K account. Commissions will kill my account. I need to prove that I am good enough to grow a small account with 3 day trades allowed a day. That's all I need. If I'm really a winner, if I'm really good at it, 3 trades a week will be more than enough. Next point, I will take profits faster from the winners, especially when I see a weakening upward trend if I'm going long. But I would also add that I should cut my losses even sooner. Next point, never swing for the fences, meaning I will not add my entire account value. Just a small portion. I have to manage my risk. Next point, focus on solid base hits. I need to focus on just making sure I'm green, that I follow my strategy, that I executed correctly. The only thing I'm following is one, there's potential. Two, there's attention. Three, I make the move. And four, I get out quickly, either on a win or a loss. Next point, burst of high volume indicate near end, or it can call pause and then resume. This is something I haven't really seen or paid attention to. But why would that be? Why would burst of high volume indicate near end? Possibly, for me, it sounds like the big in a big exchange from bears or bulls to bears and bulls and bears to bull and bulls to bears has occurred, and there has been a huge move in price, causing a big number of losers and a big number of winners, causing the end of the trading cycle. That's in my interpretation. Next point, prices reflect what people think, and volume reflects the strength of their feelings. This is a very good one. I like this one a lot. People are thinking, their convictions are showing. The amount of volume reflects the strength, how convicted they are. Next point, open interest is measured by volume increase, with bears and bulls entering holding a strong opinion. Well, I haven't really analyzed what open interest means. Open interest. Yeah, I don't know. Oh, let me Google that. But next point is tops take longer than bottoms to form. Open interest. The number of contracts or commitments outstanding in futures and options that are trading on an official exchange at any one time. So these are for contracts. I am not in the contracts market. Tops take longer than bottoms to form. That's true. Meaning long, it's easy. It takes longer for a stock to go up than when it crashes like crazy. So another reason to cut losses really fast. Next point, if a rally is not attracting new orders, it will reverse. Meaning, if in order for a stock to continue its course up, more people need to get involved. It's a really good point. It's a really good point. There's people out there, trading, but if they're trading something that's not getting people's attention, how is the stock going to go higher if there's no new people to push it higher? So volume shows interest and new incomers, and the new incomers see the potential for it to go higher. There's opportunity there too. Think about that. Think about that. If the rally is not attracting new orders, it will reverse. Be ready to exit if volume is not increasing. Next point, only trade clear charts, don't force anything. So if you have to really look at the chart and you don't see anything, then there's probably nothing. But if there's a clear indicator or trigger or strategy at play, then focus because something might be coming. That's for me to understand. I need to focus on charts that show a clear strategy to take place. Next point, I don't forecast. Instead, I need to monitor the let the relative power of bulls and bears. Again, convictions goes back to convictions, goes back to feelings, goes back to um, price movement being the feelings of traders, and the volume is the how strong those feelings are. Next point, if possible, I will move stop loss to break even or as soon as price moves higher, just to make sure I am um, getting at least some profits and protect myself from any major losses. Next point, a volume spike means weak hands have been shaken out and a reverse may come. A volume spike means weak hands. So weak hands have been shaken out. So it could mean yes, um, there's conviction, but it could also mean that it's going in the wrong direction for some people, and the weak hands are letting go, causing an even worse scenario. A good scenario is when there are more of one, there are more bears or bulls agreeing together to move the price higher or lower. So when there's an overwhelming amount of interest in the stock, that means there's an overwhelming chance that it will move favorably. But once, but if there's a second opinion that's pretty strong as well and causes um, disappointment in the other group, there will be a shaking of hands and prices may move in the opposite direction. That's why it's important to pay attention early in the morning when there's a lot of involvement. For me, that's what I do. Um, if there's nothing, I stop trading for sure, definitely. But some things may appear, but the charts have to be clear. I have to see something. I have to anticipate something. I have to plan for something. If that something is not occurring, then I just let it go. And if eventually I will probably start to see something, then I start focusing, pay more attention. Price is moving sideways. That's consolidation, meaning there's a decision about to take place, either going up or higher or lower, or it's gonna be a sell-off maybe. So it's important to know what's at stake during the consolidation phase. Still need to learn more about that consolidation. What's happening in people's minds? Well, there's confusion. Maybe something in before that consolidation had occurred, and there's people called bag holders who are ready to add to their position or just let go of their position. And yeah. Next point, a market decision is occurring as you see price change and develop a pattern. So decisions are occurring. You're seeing the decision take place. I am seeing a chart of decision, a chart of conviction, a chart of emotion, a chart of feelings, a chart of strength of feelings, a chart of beliefs. That's what I'm seeing. I'm seeing decisions taking place. Next point, I follow the simple strategy of detecting patterns and breakout opportunities. It's simple but not easy to implement. But I just do that, and with a series of trade approach, if my strategy is correct, I will come out profitable. Next point, I can't prove I'm right. I can't prove I'm right. I can't force anything. I can't make the market do something I want. I just have to be there to reap the opportunities, on the opportunities. So I can't prove. I don't have that power. I only have the power to control my position, control my losses, control and manage my position, control when I'll take profit, control um, when to get in, when to get out. That's the only thing I can control. Next point, I move my stop level to new pivots. I pay attention to pivots. Pivots are kind of creating support and resistance. So, next point, your first time may not work, so try again. The first time may not work, so I have to try again because it's a series of trades approach. Next point, buy in at breakout. And you will see breakouts with lines, resistance, triangles, tones. I will not get too creative, otherwise I'm just forcing something and I'm just creating a scenario that I'm imagining. Next point, I could buy in. I may buy in. I sometimes buy in at breakout, a previous candle, but I wait another minute to confirm that. And I wait to see that stays above that breakout. Next point, the trading pattern will keep me calm. So I have to trust the strategy. I have to trust the pattern. I have to know that I see something already and I know what I should do. I have to know what to do in a situation and I just have to implement my strategy. So that's why I'm calm, because I know what to expect. I know what to do. I'm ready to take action. That's what's going to keep me calm. If I don't know what I'm doing, I'm going to panic and I'm going to make dumb decisions. When I know what I'm doing, I keep calm and I execute. I know the outcomes. I know anything can happen. So I'm not surprised. I don't want to be surprised. Next point. It's not emotion and easy, but patterns will rationalize it for me. That's why it's important to understand my patterns. It's important that I trust my pattern, I trust my strategy, I trust what I'm doing, and I know what I'm doing, and I know what's happening and what's causing certain things to happen, and I know what could potentially happen, but at the same time, I know that there's risk. I know where should I get out. I know that there's lines that control and trigger bulls and bears to do certain things. Next point, identify prices where there are bag holders. This is something I haven't studied, so something I need to focus on. If I were to do it right now, a bag holder is somebody who um, got in at an unfavorable price and the stock went against them, stock price went against them. So they're hoping that the stock goes in their favor again. So it went against them, but not in a super crazy way. So they're keeping the stock from moving down way too much. But anything that causes it to um, go down even further, they will let go and they give up. But if it goes up a little bit, close to where they got in, just so they can get their money back, they will not wait and see if it breaks out. Um, if it fails again, they give up. It's possible they just give up and they plummet the stock. Same goes to shorters. If I were to explain it, they got it in a wrong position. Stock went up rather than down a little bit. They're holding, hoping it goes lower again. It forms a higher low, which indicates there's more conviction towards the long the long side. So they give up, prices move higher, hands are shaken, momentum is created, opinions may be shifted temporarily. Um, that's an opportunity to take advantage of. Almost done. Next point. Um, Identify stocks that are grinders so you can use those stocks. I mean, it's hard. That's gambling. Never mind. Next point. I need discipline to improve. So I need to have the discipline to go on a trade, on a series of trade approach. Um, I need to have the discipline to wake up and practice early in the morning. I have to have the discipline to make the move. I need the discipline to manage my losses, manage my share size, manage all these little micro things that add up to either a great loss or a great outcome. Okay. Next point. Um, know which trend will be forming ahead of time. Otherwise, it's too late. I have to know what's possible, what trend could happen, what's most statistically likely to happen. That way, I can not get in too before it happens, but be ready as it happens, and not be like, maybe, oh look, it's happening, and I go in FOMO, almost FOMO um, style, where it's like kind of too late. I want to be in right as it occurs, not as it has already occurred, or and also not before it occurred. I want to know that there's confirmation. Next point, a true breakout is confirmed by high volume. This can be something I should pay attention to because volume for me means attention. It means a shift. It means new people, and the volume could be gradual. It could be more people like, hey, look, and then more people hear about the stock, and there's a chance that the conviction with the side with the biggest conviction convinces the newcomers to contribute to a higher price movement or vice versa. Next point, every price has an emotion. Every price, there's somebody with that has bought in or sold at a certain price, and it triggers an emotion. People are either wanting to get in, take profits, they're taking profits, taking losses, barely getting in, taking a position, adding on to their position, um, taking huge positions, just taking small positions, um, creating all this noise. But at the end of it all, conviction wins. Whoever has the most conviction wins. Um, so yeah, every price has an emotion. Know what can happen at each price. What's what type of people we got. You know. Next point. I'm not. I'm not going in because so go in if you have stop losses at pivots. So pay attention to pivots. Basic. I'm basic, but I haven't really done that. Next point. I need to change my judgment. Again, these are old points. I need to train my judgment. I will be doing that every day that the stock market is open. Next point, find the pattern that works for me. I need to find the pattern, the strategy that works for me, and just keep doing it and proving and testing and seeing if it's correct. And if it's correct, keep doing it. If it's incorrect, find out why it's incorrect and what can you do better. What can I do better? Next point, trade the best, leave the rest. I think I've talked about that already. Next point, break over the highs and retesting. Mm. So if there's a pre-market high, it can get retested, and that's gonna be a resistance level or vice versa. I need to pay attention to that. You know, the price went there before, it can go there again. Maybe, not always the case. Next point: be willing to give a small loss. So it's part of the game. If you're losing and it's going against you, get it out, take the loss, move on with your day. Next time, you know, this is just you're it's never gonna always go your way. Next point. Get familiar again with triangle formations. They're not always correct. It's better for me to pay attention to momentum. Next point. Trade aggressively when doing good or vice versa. I kind of don't agree with that yet because I don't have a big account and I would rather stay at a consistent small win thing, and then once I'm confident enough, I'll increase my share size a little bit more, and then take bigger wins, bigger wins, just gradually, you know, gradually increasing my confidence and stuff. Next, buy higher highs. Sounds like contrary to common belief, but if there's momentum, there's attention, there's volume, then it's probably something I will do. Again, this is not advice for anybody. This is what I'm doing. This is for me to listen while I'm working on my headphones. If I have time, if I have free time, this is something I'll listen to. Next point. Okay, what am I talking about? Review the stock charts that I've collected. So I take screenshots of stock charts and I review them. I need to make that a priority. I need to make that a thing. I need to make that part of my routine every day, every morning, probably before market open. I should have my file of stock charts open and ready for review. That way, I have something to look at and prepare me um, for market open. Okay. Next point. Wait, why did I close it? Next point. Track setup criteria. Track setup criteria. What did I mean by that? I don't know what I mean by that. Track setup criteria. okay, okay, I know what you mean. So make sure that the stock that I'm following meets all the criteria. It meets all the requirements. That there's a reason why I am paying attention to the stock besides other ones. So yeah, a justification for trading basically. Next point. Um, Stock trading could be 50. It's pretty much 50-50, but your losses and wins don't have to be that way. They could Your losses could be a small percentage compared to your wins. So you win more than you lose in terms of dollar amount. For every time you lose $15. Every time you win, you make $50. Or in terms of percents, I lose 3% every time I lose. I make 10% every time I win, or such and such. Uh, a 25,000 next point. A $25,000 account doesn't work for me because I haven't proved that I am correct, and I wouldn't want to kill my account with commissions just to try to make money. I'm not here to make money. I'm here to just have fun. I'm here to, of course, not lose, but I want to be to win. I'm here to win, and with wins come profits. I'm here to enjoy the process. Last points: join the mob, ditch the riots. So if I'm going long, I am going to join the mob, which collectively moves towards something and cause. And for me, a mob is like developing in terms of stock. It's developing an increase in stock price. In a riot sounds destructive. It is breaking down the price. It is causing chaos, causing panic, and people are selling off. And so, if I am going long, I want to join the mob. If I was going short, I will, join the riot, ditch the mob, and yeah, sounds horrible, but it's very innocent in terms of stock trading. Next point, I understand mobs and riots, same thing. What's causing them? What's causing the mob to grow? What's causing the mob's conviction? So I gotta understand what's behind all this price movement. Why is it going up? Why is it going down? There's sometimes no reason, but if there's a reason, that's even better. So I look at the news. I look at um, momentum, technicals. I prefer news, a catalyst. Next, black swans are very common in trading, so I should not gamble. I should be very careful. That's why I need to focus. I need to pay attention. I can't take my eyes off the screen. If a trade is on the table, I need to pay attention. So anything can happen. I can lose a lot of money. I've done it before. So black swans are very common in trading. Be ready. Be fast. That's why you gotta be fast. Next point: trade the trend, not the tops or bottoms. Yeah, so this is if I'm just looking at tops and bottoms, I'm speculating. I need to trade the trend. The trend is backed by momentum, volume, catalysts, higher highs, lower lows, higher lows, and such and such. Um, Next point, I should not add to a losing trade. I will not add to a losing trade. Why? I should just get out. I should have gotten out yesterday. I should get out quick before it comes to that. I don't want to come to that point where I'm like, should I add and try to revenge trade and try to get my money back? No, I should just get out. I shouldn't even have to end up in that position. I should just get out before I end up in that sad position. Next point, staring at a ticker is not a waste of time. Staring at ticker movements is developing my understanding of human behavior. It's helping me understand what people are thinking, their convictions, what they thought, what the chart has caused them to do, what they thought was gonna do, what they're analyzing. It's a chaotic place, but looking at that helps you test your ideas, and you have ideas. I have ideas in my head, and I'm testing. I'm seeing like, oh, I think this is gonna happen because I see such and such occurring. Let's see if it does happen. Let's see if I'm right. Let's see. Let's improve. I want to improve my judgment, and that's how I do it. I do it by looking at the tickers. Next point: investing and trading hybrid. Blah blah blah. No, that's it. I think that's it. For options, maybe wait for the price wave to get out of the money. Hmm. The current risk is not worth it. Maybe options can influence stock price. Possible, possible. Oh, actually, I'll do that. I'll look at um, option prices. I'll look at option prices, option strike prices, and I could probably test that out and see if I draw lines on stock chart and see if that's a support resistant point and something that um, could trigger somebody to cause stock, some behemoth person or institution to cause price movement. Pay attention to will someone pay more? Let's touch. Okay, that's it. That's the last of it. I'm done. 20 minutes. An hour of content on the list of things that I look at and that I've been keeping note of. It's not a lot. It's just me taking time to pause and yeah. All right. Bye bye. Um, yeah. See ya.